the original number was 57 billion. It is now down to 54 billion.
Understood. Now, secondly, if you look at you're one of the large customer, if you look at the RHP document, which is talking about the utilization of the funds, it doesn't talk about the repaying operational vendors like us. It is talking about future capex. So where is this confidence that we will be able to collect? Is it because it doesn't look like it will be paid through the fund raised? So it has to come from the natural operational cash flows for the customer, or do we have some other way of collecting this?
So Arun, to be honest, I think I would not guess on behalf of the customer in terms of how the overdues will be cleared. I think we are working with them on how the overdues will be cleared, but where the cash comes from, I don't think we will be able to comment on that one. So our confidence comes from the fact that we are engaged with them to see how the overdues can be cleared, and we'll keep you posted.
Okay. And lastly, on the growth that we are anticipating, because the customer will do more capex and expansion. From our side, all our towers which we have done in the past, does it require some additional capex to support the more loading in anticipation of this customer expanding, or that part of the capex is done and our capex is more towards new sites?
No, I think even if loading based on a site configuration, there may be some capex required. So I think there is not a general statement that I can give. It is based on the site-by-site configuration on what is required on the site to provide the additional loading. So I think in some sites may be lower, but some sites may be higher as well. So I think it's a mix.
Yeah, Arun, just to add on to what Jude said, obviously every tower has a certain loading capacity, and with various tenants on the tower, different loading capacities are utilized. So depending upon what new requirement comes from this customer, either we strengthen or a little bit of incremental capex or no capex could be a situation, but depends upon tower to tower.
Understood. So all this means that we are kind of nearing peak capex and possibility of the dividend will also be there, given that the uncertainty is more or less now reduced. That's a fair assumption.
Yeah, I think for the dividend, Vikas already answered the question. I think, as you said, I think our elevated capex remains, and I think we have a visibility for the next few quarters as well, where the rollout momentum will continue. And depending how the overdue clearance or when the overdue clearance happens, I think that will be a discussion that will happen at the board in terms of how we can review the dividend.
Okay. All right. Fair. Thank you very much. Thanks for the clarification on this.
Thank you.
Thank you very much, Mr. Prasad. The next question comes from Mr. Kunal Vora from BNP Paribas, Mumbai. Mr. Vora, you may ask your question now. Mr. Vora, you may ask your question now.
Yeah, hi, sorry. I was on mute. So my first question is on the average rental per tenant for FY25. How should we look at that number trending? Directionally, will it be stable or increase or decrease? If you can just tell us based on like whatever renewals are coming up and your expectation on average rental.
So I think ARPT, Kunal, has been fairly stable. I think except for one factor, which is within our macro also, we have different designs of towers, and as a result, there is a mixed impact that we see. And obviously, the new rollout is leaning more towards designs that are more agile and nimble, and as a result, carry a lower rental. So to that extent, there are some minor movements in the ARPT, but otherwise, ARPT, other than the mix, is fairly stable. So no major movement anticipated there.
So for the old macro towers, are you seeing some rental escalation every year? I understand the mixed part that new towers are coming with slightly lower rentals. but for the older towers?
The older towers are basically following the MSA construct, and we have the normal contractual escalations built in. So they go through the normal MSA process.
Which is around 2.5% annual escalation?
That's right.
Understood. Okay. And on CapEx, I understand you already discussed, but just if you can provide, what kind of visibility do you have at any point in time? Is it for 3 months, 6 months, 1 year? So do you get at the beginning of FY25, do you get say orders for 15,000-20,000 towers put together, which the key tenant might be willing to add over the next 1 year? So if you can provide, what kind of visibility do you have for FY25 compared to FY24? And also if the tower addition get back to the run rate which you had earlier, which is what you had in FY21, 22, 23, would the capex also come down sharply by say 50%, maybe in second half of FY25 or FY26? What kind of decrease you can see as in when the tower additions moderate?
Well, I can tell you that normally as any company we work with our customers to get a forecast for the year. So I think what as Vikas mentioned in the commentary, I think the order book looks very strong for the remaining part of the year. So I think the capex will remain elevated for the next few quarters. And by the time the year ends, we'll get more understanding on the customer plans for the subsequent years. So I think FY25 still remains a high rollout year for us in terms of towers.
Understood. As strong as FY24 or even stronger? Or if you can provide some color on this.
I think, Kunal, we hope to be stronger, but I think it remains quite.
Understood. Okay, I won't probe further on that. Last question on if you can talk about the MOU which you signed with NTPC on renewable energy-based power projects. How does it align with what you are doing, and what would be the return expectations?
Yeah, so I think, Kunal, the MOU that we have signed, actually, as I mentioned, one of the key deliverables, both in terms of energy, cost efficiency, and our ESG commitments, our plan is to increase the renewable portfolio. And as you know, the Green Open Access policy has been rolled out and 12 states have adopted it. So directionally with this MOU, what we are looking at, but not just with NTPC, with other players as well, on how we can get into an agreement with them on the Green Open Access based on the capacity they have, and how we can get both the arbitrage and improve our carbon footprint. So I think, it's an initial MOU. We'll see how we can deploy at scale and increase our renewable portfolio across the board.
Can you help me understand the financial implications? What kind of capital deployment might happen? Whether there will be any revenue implications, or is it not really material from modeling perspective?
No, I think it will impact the cost efficiency. Exact numbers of capex and how much will be the cost is probably the next stage of the MOU, right? Depending on which state we deploy, because every state has a different tariff structure, and also the agreement of the PPA price with the players. So I think I can't comment on exactly what the benefit would be, but as we move forward on the next stage from the MOU, we'll be able to go state by state and quantify what benefit we'll get from both cost efficiency perspective and
Yeah. So just to add, I think these are a bit early stage as far as our initiatives on green open access or renewable energy is concerned. So I think the commercials on both sides, on the renewable company side as well as on our customer side, they need to be sort of firmed up, and that's going to take some time. So that's work in progress. So I think in terms of the financial impact and so on, it'll be too early to really call out anything. But as and when we sort of make progress on this, we'll update you.
Understood. But just say follow up on that, you had an older initiative you're working on smart city. Where is that now? I mean, it's been many years now. We haven't really heard much about it. Is it having any impact at all, or it's not something which is a priority now?
Well, I think, to be honest, smart city and green open access are not related. But just to give you an update on smart city as a project even from the GUI Government of India side as well has taken a little bit of a backseat. So whatever our commitments were made on the smart city, we have executed, and whatever revenue, but it's not material enough to catch PI. But I think the smart city initiative was very much dependent on what the Government of India was planning to do. I think that has scaled down a bit. So I think whatever limited we have in terms of our scope, we are executing.
Understood. That's it from my side. Thank you, sir.
Thank you.
Thank you very much, Mr. Vora. Participants who wish to ask questions may please press *1. The next question comes from Mr. Vivekanand Shubharaman from Ambit Capital, Mumbai. Mr. Shubharaman, you may ask a question now.
Yeah, hi. Thank you for taking my question. So I was on that the weak operator has now received. When they expand their network, do they have a choice of expanding their network in terms of population coverage expansion only through lean sites and not through macro towers? That's question number one. Secondly, as far as the overdue amounts are concerned, how should we think about that amount and the aging of that? I understand that there is some amount that is there in the trade receivables segment or reporting, and then there is a balance sheet provision also that has been made. So there has been amounts that are written off. So in your discussions with this operator, how are the payment terms being worked upon, and is there any discussion on the accrued interest as well? Thank you.
Vivekanand, I'll just take the first part, when you say whether they have a choice to do the expansions only through lean towers and so on. See, typically different types of tower structures have a coverage need or a capacity need, or what kind of terrain is to be covered. And since the operator will plan their network depending upon where they want to strengthen their network, I don't think it's one type of structure that would suffice. They would need multiple solutions to bring in that capacity or coverage need, and therefore, to our understanding, different types of structures would be required. We have a full portfolio, so whatever the customer needs to expand their network and coverage and capacity, we have all the solutions available to support them, and therefore we are at least fully geared up to do that.
On the second question, Vivekanand, as I answered earlier, I think the terms of payment and the overdue clearance, I think we are in discussion with the customer. I would share it as we know more firm answer and as we get the overdues cleared. So I think I can't comment much on the structure per se at this time from the unwinding point of view.
Okay, fair enough. Just one follow-up on the macro towers versus lean towers point. So currently you have lean co-locations of around 11,000. But when you look at the total towers that you have, they are around 2.2 lakhs. So from your vantage point, the lean towers as a percentage of the total portfolio that you have is not very significant, right? So it's maybe just 5% of the portfolio. But as a percentage of, let us say, an operator's network, is this much bigger in percentage terms? Is it like operators now have 10 to 20% of their network on lean towers? I'm just trying to understand the other side so that when we look at the rollout plans of let's say the third operator, now that they have the funding, how to think about the incremental tenancies for you on your macro towers, where you're incurring large amount of capex, and on the lean towers.
See, let's put it this way, Vivekanand. I mean, as I said, different towers have different capabilities. A macro tower gives a larger height, it gives a larger throw, and therefore, depending upon what frequency they are radiating on, they will need a certain number of towers. They can do a wider coverage through a higher, more height tower. Leaner towers obviously have much lower height. They have a smaller configuration, smaller loading capacity, and so on. Therefore, depending upon where they are going to expand, whether it is rural or semi-urban or whatever, typically macro sites are a better solution. If one is just trying to add capacity into a dense area and so on, leaner towers is the solution. So as I said earlier, it will clearly depend upon where they want to focus,
what pockets they want to densify and grow, and therefore different solutions for those kind of needs.
I think, but the portfolio will remain balanced. I think they will need macro and
That's true.
lean both, right?
We've not seen across operators a big swing in terms of lean versus macro. It depends upon where they want to add capacity or coverage.
Fair enough. Just pressing a little bit on the provisions and the receivable from this operator, right? So the way to think about collections from them now is to look at your trade receivable, which is there on the balance sheet, and the amount that you provided for against bad debts, both, right? You are looking to recover. I'm just trying to understand that when you say that you're confident of recovering this amount, I'm trying to understand whether this includes the amount that you have written off from the balance sheet and the balance sheet recorded trade receivable, or is it just the trade receivable on the balance sheet?
No, you're right, Vivekanand. I think obviously the recovery will be the gross figure. By the way, I mean, technically we have not written off any receivables. We have only provided to de-risk our balance sheet. But we are very much pursuing the full amount, payment of full amount.
Right. Okay, that is very clear. I think there are some media reports that are perhaps carrying an erroneous number in terms of outstanding. I mean, if you clarify on this, then it will certainly help in the general public's understanding of how much you can potentially recover from the said customer. Thank you so much.
Yeah, sure. I mean, maybe offline, if you can let us know, Vivekanand, which media reports you're referring to, we can certainly see how we can correct it.
Sure. Okay. Thank you.
Thank you.
Thank you very much, Mr. Shubharaman. Participants who wish to ask questions may please press star 1. The next question comes from Mr. Sanjesh from ICICI Securities, Mumbai. Mr. Sanjesh, you may ask a question now.
Yeah, thank you. Good afternoon, all. I got a couple of them. First, on the ARPT, I know you touched upon it, but a little bit more clarification. This quarter, it was flattish quarter on quarter, despite a single tenancy tower going up, and we have a strong 5G loading, which is adding to the revenue and not to the tenancy. That means effectively it should reflect in ARPT. But despite both the things, we have a flattish ARPT. I understand that you said there's a change in the mix, but again, is that change so drastic that it is actually the rentals are lower than macro rental to an extent that it is pulling even the loading revenue effectively down in the ARPT conversion?
So if I take that, Sanjesh, I think we had sort of tried to explain this even some time back. So basically in ARPT, there are again a lot of moving parts. So of course there is a 5G uplift that we see in the ARPT, but at the same time there is a sort of downward pressure coming from the mix, as I was explaining, because most of the new rollouts that we are doing are low rental rollouts. There is also the element of every month, every quarter, some tenancies coming up for renewal, and we are sort of following the same framework we had signed with our customers back in FY22, whereby we had given them some renewal discounts and so on. So there are some of these main factors which are creating downward pressure, and of course the loading is helping us. So the net result is broadly we are seeing a very stable ARPT scenario.
Fair enough. Just one more on that. What is the renewal tenancy expected to come up in FY25?
Well, we have roughly 8 to 10% of our portfolio getting renewed almost every year, Sanjesh. So we had a bulk renewal in FY22, and thereafter till about next 2-3 years, we have pretty much 8 to 10% or 12% coming up for renewal every year.
Okay, so that phenomena will stay for, say, next another 2-3 years at least, if not more.
It's a ongoing phenomena, I would say, because, typically our contracts are 10 years, and the company has been in existence for longer than that, and every year we have been building towers. So there will be some renewal or the other every year. So it's an ongoing phenomenon.
Got it. And this is getting renewed again for the 10 years, right?
Yeah, that's right. Yeah. That's our.
So the cycle remains very smooth and stable.
Yeah, that's right.
Got it. Second, on the leaner towers, so we have been seeing smaller companies being quite more aggressive on the small cell side, and we have seen numbers being quite strong for some of them. Where are we in this cycle? We earlier alluded that we were focused on rolling out macro sites, so the small cells have for a while taken a backseat, and you were still evaluating the business which you want to establish in the small cell. Now that you expect macro rollout to be stronger even for next 2-3 years, is it fair to believe that small cell rollout will remain in the same range as what we are doing today?
Sanjesh, I think, first of all, I think the rollouts for macro will continue, as I said earlier. Now, from a leaner tower perspective and small cell, in my view, are two separate things. I think on the leaner towers, I think while you mentioned that the smaller companies were making, but I think we have done quite a big rollout on the leaner towers this year as well, with close to 4,500, if I'm not wrong, close to 4,500 leaner towers in place. So I would expect that we have bounced back very strong as far as leaner tower is concerned, and we expect to do even better in the coming years in terms of percentage of share available. Now, if you talk about small cells or indoor solutions as well, I think maybe we were a little bit slow earlier, but I think our plan remains that we'll be remaining aggressive while we do macro as well. So it's not macro or leaner towers, it's macro and leaner towers. So we remain hungry for the market share for the entire portfolio.
Got it. Just one last question from my side. Any plans for the new business introduction? We have spoken this earlier. I think you were also intending to do some strategic meet to highlight the path for the Indus. Now that we will be generating good amount of cash flow, do we have any more plans to build alone any business across the tower?
Sanjesh, as you mentioned earlier, we continue to look at all those opportunities as they come, right? And there are a couple of them that are being currently discussed with the board as well. However, given the fact that the current growth on the towers remains very strong, I think from an execution point of view, the focus remains to grab the market share as an annuity business, and we don't want to divert the focus. But from a new business point of view, the time will come when we will need to look at more, and we are currently discussing, and we'll bring to you in case we do something substantial on that front.
Fair enough. Thanks for taking my questions, and appreciate all the answers. Best of luck for the coming quarters.
Thank you.
Thank you very much, Mr. Sanjesh. At this moment, I would like to hand over the call proceedings to Mr. Prachur Sah for the final remarks.
Thank you, Sunita. So to sum up, the year 23-24 was exceptional, with record tower additions driven by our major customers' network expansion strategy and Indus's role as their trusted partner. Looking ahead, we anticipate to continue the expansion in the near term, further bolstered by the ongoing 5G rollouts. We also look forward to the recent positive developments at one of our major customers there. All in all, we have multiple growth levers in terms of new tower and co-location additions and increasing loading revenues along with improving collections against the past dues. We are confident in our ability to capitalize on these opportunities in a sustainable manner given our strong foundation. I again thank you all for joining the call. Have a good day.
Ladies and gentlemen, this concludes the conference call. You may now disconnect your lines. Thank you for connecting to audio conference service from Airtel, and have a pleasant evening.